All right, some people write Yelp reviews about businesses. I post video reviews about radio infomercials. And I just heard another one on KABC in Los Angeles, non-stop infomercials on the weekends. And so this one was a guy, Jason Reynolds, Collaborative Financial Consulting. And like a lot of these financial guys on the radio who pay for airtime, sure enough, he has events on his record. Here's a customer allegation about being sold an unsuitable investment, a REIT. Gee, I wonder if this was a non-traded REIT like I talk about in so many of my videos. Also alleged to have made unauthorized trades. Both of these customers got settlements, one for over $180,000 and another for over $14,500. But AM 870, AM 790, they obviously don't care. Greg Fox, Jason Reynolds, Arif Halaby.
Sure, let's put them on the radio, as long as they're paying us. Did the check clear last week? Okay, book them again this week.
And so this infomercial, Money and Power, or Money, Women and Power, was co-hosted by Kerri Kasem, who I guess has tried to follow in the footsteps of her dad, Casey, but unfortunately, it seems like the only gigs Kerri can find lately are hosting infomercials. And, she is to radio what Vince from Slap Chop is to TV. So whenever I hear an infomercial on the radio with some guy selling himself as a money advice person, I say to myself, okay, radio airtime is expensive. He has to recoup these added costs of airtime if he wants to earn a living as an advisor. And really, the only way to do that is to recoup it. Of course, where does that money come from? You, the customers who go to these people who are paying for this expensive airtime. And also, whenever I hear these commercials, almost without fail, they're doing one of two things, or both. Either they're trying to sell you expensive products, like those dreaded annuities or maybe investment-grade life insurance, which all pay high commissions, or they're trying to sell you ongoing asset management services, which pays Mr. Advisor perhaps 1% per year. And they try and reinforce a notion that the investing part is complicated and complicated on an ongoing basis so that you need to pay them. You need to pay them, otherwise you're going to be in trouble. And when they sell you on their asset management services, they'll either advocate what experts will tell you is the ill-advised strategy of market timing, and or they'll advocate what people say is the antiquated strategy of picking and trading of individual stocks, and or they may advocate a complex portfolio of index funds. And so by making investing seem complex and complicated, you'll feel compelled to pay for their asset management services quarter after quarter, year after year. But all of this stuff is expensive, and I say unnecessary. Mr. Reynolds said,
"We don't have a cookie-cutter formula."
Well, uncomplicated is a good thing. Consumer advocate radio host Bob Brinker recommends, if you want to call it, a cookie-cutter portfolio of just 2 index funds. That's it. People need to know that investing does not have to be complicated. You pick 2 index funds, nothing wrong with that. Now, coming up with an allocation ratio and a spending strategy, a game plan, that's not complicated either, but it's probably a good thing for most people to seek out professional help, especially if they're also planning tax strategies and a legacy strategy for their heirs. But that's a one-time deal. And so you would want to go to a fee-only fiduciary on a one-time, one-task, or hourly basis. Notice that I didn't say go to an asset manager to constantly hold your hand over time. And notice that I said fee-only fiduciary. Jason Reynolds said that he's a fiduciary, but when I listened, he didn't say if he was a fee-only advisor. And I haven't seen him listed on naphtha.org, which lists fee-only advisors, so I have to assume that he might just be merely a fee-based advisor. Ask him, because fee-based fiduciaries are allowed to earn backdoor commissions, such as if they sell you annuities. Bob Brinker, who has an actual financial radio show, not an infomercial, he said that if your advisor is just a fee-based fiduciary advisor, then how can you know for certain that your advisor is making recommendations because they are best for you or best for them? You can't know for sure. But Mr. Reynolds was holding up the fiduciary shield, as I like to call it, and touted it as the highest standard of care. It's intellectually dishonest to talk about fiduciary duty without talking about fee-based advisors versus fee-only advisors. Fee-only is the highest standard because it eliminates backdoor commissions. So make sure that Mr. Fee-only advisor proves to you that he or she is a fee-only advisor. Insist on them providing for you both parts of their Form ADV, which is a written disclosure of exactly how they may be compensated for their services, and lists any potential conflicts of interest, such as backdoor commissions that he or she may earn when they push particular products, such as annuities. So in this infomercial, this guy, Jason Reynolds, said a bunch of stuff that suggests to me that he's a market timer. He talked about how big Wall Street is placing bets in, certain companies, certain industries, certain sectors, certain geographical areas, and you need to follow what they're doing. That's a form of market timing. When you invest in broad market index funds, you own everything, all in one low-cost, tax-efficient, 100% liquid fund. He also talked about how you need to be positioned for the next economic cycle and how we have an uncertain next 2 to 4 years. And he seemed to suggest that you need to, somehow react accordingly. Again, this sounds like market timing to me. When you invest in index funds, the only thing you do is percentage rebalance, which a fifth grader can do. Also, for what it's worth, there's always something to worry about. That's normal. Doesn't matter because you stay invested in your bond and stock index funds. And if you can't stomach stock market volatility, then you invest more on the bond side on day one and keep it that way. Also, the stock market is a leading indicator, not a lagging indicator. It reacts instantly to news and then it's too late. So this guy also said that he advocates taking a percentage of your portfolio and I guess having him pick and choose and trade individual stocks. Trading individual stocks increases risk, increases trading costs, and it causes you to pay taxes sooner than later. And putting aside the fact that people will tell you that it's an antiquated strategy to pick and choose stocks, putting that aside, why would I want Jason Reynolds to be my guy placing bets with my money? Why? Does he have magical stock picking powers? Does he have proof that he has been beating the indexes on a risk-adjusted basis? I'm just asking. Does he have a verifiable track record as a market timer or as a stock picker? I searched for Jason Reynolds. I searched for Collaborative Financial Consulting, not GIPS compliant. And what does GIPS do? They independently verify advisor claims about performance. And by the way, I listened to about 3 or 4 of these infomercials, and not once did I hear him make any performance claims. At one point, he cherry-picked talking about one stock that he bought in June that doubled or tripled or something. That doesn't mean anything. That means nothing about overall performance versus the benchmarks on a risk-adjusted basis. It's a waste of time. Well, what's his client's 1, 3, 5, and 10-year track record? Because professional mutual fund managers on the whole can't beat the indexes after fees. Their average shortfall is 1.1% per year after fees. So why would some guy on the radio, who's not GIPS compliant as far as I can tell, there's no way to research his performance record. Some guy who apparently juggles managing clients, promoting his business, holding seminars, and presumably running his business. What? He also has time to constantly research and pick and trade stocks? And what? He's going to do better than professional Wall Street stock pickers when the average shortfall is 1.1%? Oh, but he said he started trading at age 13 and put himself through college. So what? What are your clients' risk-adjusted returns versus the benchmarks? Oh, but he said he worked for Chase Manhattan Wealth Management, managing $5 billion. So what? I always laugh when I hear market timers boasting about things other than performance. Like Ken Marave talking about like, oh, we have over 7,000 clients. Yeah, well, that just means that you're a good salesman. That doesn't mean that you're beating the indexes. So what else? Oh, and lo and behold, on one of his infomercials, Mr. Reynolds was saying happy things about, you guessed it, none other than fixed index annuities. So he loves index annuities and he's not GIPS compliant, and yet he wants you to pay $397 to go to a seminar that he's holding. But if you're one of the first 10 callers, you can go for free. Or maybe he just gives free passes to everybody, and the $397 is just to make you think that you're getting something of value for free. Does anybody actually pay for these seminars? I'd like to know. But he swears he's not going to upsell you on him becoming your asset manager. Trust me, the purpose of this seminar, whether it's done outwardly or subtly, just you merely being in the same room listening to a money advice guy talk for a couple hours is likely to lead to you picking them to handle your money matters. Let's not kid ourselves.